Hi, I'm Omar. I'm a financial advisor at Ferguson Financial Planning of CI Assante Wealth Management. And I'm going to be sharing with you some recent market updates. The year started anxiously. As we closed out the year, it ended with optimism as inflation's eased and equities posted handsome returns. In the North American equities market, we had a standout year, ending it at near all-time highs. Both the Canadian and the US equities market posted double-digit gains. In the United States in particular, technology was the big standout, with the Big Five pulling the equities market into double-digit gains throughout the year. However, the year was not without its turbulence. The US equities market reacted negatively after the failure of two US banks, with the fallout spreading across the Atlantic to Credit Suisse. However, the stock market recovered after central banks stepped in to intervene and guarantee the safety of deposits. The Nasdaq had its best start to a year ever, with Apple becoming the first company in history to reach a $3 trillion valuation. Another standout company in 2023 was US chipmaker Nvidia. Their valuation grew by 200%. This was driven by demand for their computer chip technology, which will power artificial intelligence applications. There are a number of market-friendly Canadian and US economic indicators. Both countries experienced job growth, but that did slow down towards the end of the year as the effects of the interest rate hikes begin to be more widely felt. That slowdown in job growth was viewed positively by both the Bank of Canada and the Fed as they continue to engineer an economic slowdown and necessary evil to curb inflation. US and Canadian consumer spending remained healthy, while Canadian home sales started to slow down towards the end of the year. Some welcome news for a lot of Canadians is that inflation has been improving and dropped from 6.8% at the turn of the year to 3.1% towards the end of the year. The main contributors to that fall is gasoline prices, but mortgage interest and rental costs remain high. The Bank of Canada believes that the rate hikes are sufficient to bring the long-term inflation rate to 2% and will only start lowering rates once they believe the long-term 2% rate is within reach. To combat inflation that has remained stubbornly high, the Bank of Canada has raised interest rates by 25 basis points 3 times throughout the year in 2023. That brought the interest rate to 5%, the highest that it's ever been since 2001. What can we expect in the new year? We can expect to feel the remnants of the rate hikes. Rate hikes tend to operate in a lag, taking 2 full years to feel the effects, so we can continue to feel the effects in the beginning of 2024. The Canadian economy is slowing, which is a necessary evil and also a desired effect of the rate hikes. This will present its own set of challenges in 2024 as corporate profits and margins come under pressure. On the bright side, there is little reason to expect a severe economic slowdown. Once the 2% long-term inflation is within reach, the Bank of Canada should start to cut interest rates, leading to a resurgence of the economy. Regardless of where we're at in the market cycle, it's important to take a disciplined approach to investing and remain focused on your long-term goal. This strategy keeps emotions out of investing and avoids the pitfall of buying high and selling low like a lot of investors do. 2 quick notes for 2024 is that the RSP deadline is February the 29th, as it is a leap year. If you haven't made an RSP contribution, you can still do so before February the 29th. The new year also brings us an extra $7,000 of TFSA contribution room. This concludes this month's commentary. If you'd like to get more details, visit the link in the description. We also regularly post market and financial updates if you'd like to check those out. Thanks for watching.